All right, everybody, welcome again to the second episode of our podcast regarding real estate and mortgage related topics. And I'm here with my buddy Rick Aco again from Coldwell Banker. He's a real estate agent here in Las Vegas. So go ahead and introduce yourself, Rick.
Hello.
Oh, that sounds great, bro.
Thanks. Been working on that.
Oh, thank you. I'm glad you have. So today, just like last week, we're going to focus on some changes that recently happened, again, to some guidelines. But I think that you guys are going to really enjoy this podcast because we're going to touch on a couple of key hot topics that are kind of going on in the world today in terms of housing, right?
Yes.
And one of those is home appreciation.
Uh-huh.
And the other one is what are interest rates?
Yes.
So, got any commentary? Got any thoughts on that so far?
Well, price appreciation been going on for the past 60 years or longer.
A very long time. A very, very long time.
So those people that are waiting on the sidelines, now's the time to get in.
Yeah.
Right? Yeah, it stinks that the interest rates are so high, but there's no competition.
Mm-hmm.
More than likely, you're going to find what you're wanting in a home if you have patience and if you're ready.
Yeah.
You keep all your documents ready to go.
Yeah. Well, that's definitely going to be one of the things we talk about and tell you guys why you should be purchasing right now. But let's start off with the first thing. I think I really wanted to talk on the Fannie Mae changes recently. And the only reason I wanted to talk on that right now is it's a short topic, but I think it has some benefits and value to some of the people that'll be listening to this. So first off, let's start off with those changes. So Fannie Mae, which is one of the GSEs when it comes to conventional loans, recently changed their guidelines when it comes to multifamily units and how much you put down. So previously you had to put down 15% for a 2-unit property and 25% for a 3 to 4 unit property. As of November 18th of 2023, it's going to go down to 5% across the board. So I think those are some really great changes. And I don't know, how do you think this is kind of relevant to?
Well, it's great for wannabe investors, people that want to get into building generational wealth, do a flip, get into a fourplex, because there's not very many duplexes here in Southern Nevada.
May not be here, but a lot of other places like California, places like that.
California, yeah, Midwest, places like that, a lot of duplexes. But here in Vegas, quads, if somebody wants to get in and live in a fourplex, a quadplex, rent out the other 3, or fix them up as time goes on. So
yeah,
it's going to be a less barrier to entry.
Yeah, absolutely. I know, like when I was telling you earlier, FHA already had this option in terms of putting only 3.5% down for any 1 to 4 unit property. But I think adding the conventional aspect does give people more options when it comes to it, So now instead of just having to go FHA, you have the option of going conventional. And some of those benefits when it goes between FHA and conventional is sometimes conventional can have a better rate depending on the market. Not necessarily this market, but in some markets, sometimes the MI or the mortgage insurance could be a little bit cheaper. So that can be something that interests people when it comes to it. But the other thing I was going to say is the good thing about multifamily homes, which I wanted to touch on what you were talking about earlier, is that you only have to live in one of the units for at least 1 year.
Yes,
right?
That's right.
And then what do you do after that, Rick?
Go buy something else.
Yeah. So you just basically, for anybody that doesn't know, anybody living in a multifamily home, or the reason people get into multifamily homes is because they want to start investing, and it's probably one of the easier routes to go about it, correct?
It is, but the thing is, in Vegas, because that's where we live and work, is some of these units are trashed out. Honestly, they're not in the best of areas. But if you want to help bring up a neighborhood, be your own landlord. If you're handy, and if you have a lot of balls,
yeah, being a landlord does have its perks, but it also has its downsides. So it's not necessarily for everybody, but if you're up for the task, in all honesty, it's one of the best ways to kind of start your investing.
Absolutely.
Yeah.
Just think if you bought something like that 3 years ago, 4 years ago.
Jesus Christ. Well, you bought the unit out here, probably would have been like 300,000-400,000. Now probably worth like, what are they selling for? Like 800,000-900,000 probably.
Let's go
Ish.
5 or 6 because
Still
you know, not in the best neighborhoods generally.
It's still good,
But still,
yeah.
Price appreciation. Get out,
Yeah.
go buy something else.
Yeah, exactly. That's one of the key things too. I mean, you can always sell those units in the future if you feel like you're not really into it. You probably sell it for a good profit, but again, entry level investors, this is one of the best ways to go about it. If you don't have a family and you're doing it by yourself, or maybe with a spouse, or maybe with a business partner, you guys can take like the smallest unit, right? Live in that one and rent out the bigger units. Use all that rent and then help pay for whatever mortgage you have.
That's right.
And then over time, in the future, when rates get better, or maybe when you have enough equity in the home, just refinance and take out that PMI. Or sell it and do what with it?
Go buy something else.
Buy more investment property in a sense, right?
Yeah.
So, this just a quick little thing on there, like multifamily homes may not be very common here in Las Vegas, but they are very common in a lot of different places. And people are still using to this day that as their entryway into investment properties.
Especially the FHA product.
Yeah, absolutely. The FHA product is still really, really good. So, if you want to get into one, 3.5% down versus 5% down, that's a big difference. Like if you're looking at $500,000 home, what's the difference in 1.5%? That's like $7,500 extra to get into a property.
Yeah.
Right. Or if you're doing even a smaller one, it doesn't really matter. It's still a price difference for both. But again, at the end of the day, it does still give you more options. You can go in and say FHA is probably going to be better for me because maybe my credit score is a little bit worse and it's easier for me to get in. Conventional obviously is usually a lot more beneficial for those clients that have a better credit score and usually better down payment for the most part. But FHA conventional still has those good products and interest rates for first-time home buyers as well.
Good to have options.
Exactly. All right. So enough on that. That was just a quick little guideline change that I felt like people should know about. It is great and it does have some benefits for some buyers. So the next thing we're going to talk about is just home values and interest rates. So I sent you that chart earlier, and it seems like people had this misconception that home prices were just going to plummet after last year.
Yeah, everybody got scared after July, August
of last year,
and then, man, October, November, December, it was gnarly.
Yeah. And he doesn't mean gnarly like a good way. It was
scary.
Yeah, absolutely.
Especially for the home builders, the new home builders.
Yeah.
They were flipping out. Lenders, just trying to find a way to make it happen. So getting creative on making
things happen.
Yeah, and I'm getting things done. Getting people into homes. Because it was nuts.
Yeah. I think the biggest craze is, social media and all the outlets that we have in terms of media out there always have these clickbait articles, and people tend to react really, really negatively to them, or just in general react to them. And one of the things people thought was that home prices were going to plummet 10, 20, 30% because they felt like there had to be a correction just like 2007 and 2008.
Not going to happen.
No, it's not the same. We're not in the same market. You know what I mean?
Not at all.
And we can...
this is a normal market.
It's as normal. It is a normal market more sense than those markets were, right? And 2007 was just... We can have a whole podcast probably just on 2000, the crash itself. But that was an anomaly in itself. This is a different form of an anomaly with low inventory, slightly higher rates, which are more normal rates compared to if you look at the last.
7.72 since 1971. 72.
Yeah,
it's normal.
Yeah, and I know people are going to argue. They're going to be like, "Well, house prices have changed and appreciation." And yeah, absolutely, that's correct. But
they're also going to go up in value.
Yeah, exactly.
Appreciation.
Homes have been appreciating even with interest rates. And if you want to talk about those interest rates right after the crash, some of the interest rates were so low because they were manipulated to stay below average for that long. You know what I mean? Because they wanted to kind of create more of an appetite for real estate and make sure it was affordable. And they did too much of that in 2021 and 2020, and it kind of bit us in the butt for doing something like that.
Yeah.
But here in the chart, since it looks like February of 2023, right? Home prices or home appreciation overall has been on a steady incline, right? And specifically here in Vegas, I think you sent me a chart, right? When did that start? Or when did Vegas start seeing its turnaround in terms of it?
Let's see. I don't have the one for Vegas. I just have national. Wait. Price appreciation over the last. No.
So price appreciation, as Rick sent me, was this one for Las Vegas.
Yes, that one. Sorry, just found
it. So tell them a little bit about like what this chart's kind of been telling you and like what you've been seeing here.
Well, the title is have price decline stabilized in Vegas, and July, August of last year, they were on the plus side, and then September through March, down, and April, May, June, July, and August keeps getting better and better.
Yeah. So just to kind of give you guys an idea of what the chart looks like, and I'll probably put up a picture of it here. But just like Rick was mentioning earlier, in October of last year, I think we've seen the biggest decline in home value, specifically here in Las Vegas, right? And it probably happened all around the nation, but I think it was a negative 2.4% just for that month. And the preceding 5 months was on average between 1.5% per month. But since April, it looks like we've been on the incline. Let me see. I think April was 0.5%, May was 0.7%, June, July were about a little under 1%, and August is over 1% as well. So year over year, we're starting to, or at least over the last 4 months, we're seeing at least a 4% incline,
Yeah,
in home prices here in Las Vegas, right?
Yeah.
But that's not the only place. Like I think we were talking about like other metropolitan areas.
Yeah, San Francisco, Boston, Chicago showed growth. The Los Angeles market, New York, they're seeing increases. So it's good for everybody.
It's good for the seller, but at the same time, I think it's just trying to remind people that assure them home prices or home appreciation isn't dropping, right?
No.
It's steady. This might be our new normal in terms of home prices. You know what I mean? So I don't understand why people are so scared of purchasing a home when, if you wait a little bit longer, if these home prices continue to go up, you may have a missed opportunity.
Well, it really depends. Do you have a home to sell at 3% interest, or 3.5%, or 4%?
Yeah.
If you're on that side, then it kind of doesn't make sense. But if you really have to move, what makes the most sense?
Yeah, when it comes to moving,
is it, does your family need more room? Is it growing?
Yeah.
Has it decreased?
Yeah.
Their life changes. So.
Yeah. I think so. The reason to move, I think what we were talking about there is if you had to move and you have one of those interest rates, correct? Like, what are the reasons or what would force you to do it? Because no one wants to move if you have a 3% interest rate or 2% interest rate. It doesn't make any sense.
It does not make sense.
Right? Why would I leave my house right now and it's perfectly fine? My payment's at 2% to go purchase a home at whatever interest rates are today.
Yeah.
Right? For the most part, you're almost doubling your payment on a monthly basis.
Oh, for sure.
Right?
Maybe triple.
Maybe.
Yeah.
Depends on how low the price is. But yeah, so home prices have been back on the incline. So for those that think that, I'm scared, the prices are going to crash, yada, 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 data is showing the complete opposite. It shows you that home prices are still appreciating. And part of that, again, is we still don't have as much inventory as we did before.
That's right.
We still have people wanting to purchase a home, correct?
Yeah, we're probably short 60,000 homes in Las Vegas.
And that's a lot.
Yeah, Clark County. I'll say Clark County.
Yeah, because we in general aren't that big of a city. We're a metropolitan city based now, but still, we're not one of the bigger cities. And $60,000 homes.
That's a lot of homes.
That's a lot of families.
It's a lot of demand.
It is. And we still have a lot of people moving to Vegas because Vegas tends to be one of the has one of the highest rates of people moving in terms of transients from other cities or states to move here, correct?
Absolutely. Still one of the hottest places to move to.
Literally.
Literally.
Literally. It's not summer right now, so we got some good weather out there. I think it's 70 degrees, guys, so feels great. So with that being said, and us just kind of talking about how home appreciation is going up, I want to talk about why I feel like we might still see more appreciation and what might push more people back into the market. So if you guys haven't heard, this week we had a really good week for interest rates in terms of mortgage rates. And part of that was due to the fact that the economy was showing some weaker signs in terms of the unemployment rate going a little bit higher than expected. Created jobs was lower than expected, especially after the adjustments from last month. And on top of that, the Federal Reserve had their meeting on Wednesday, and they decided not to increase interest rates or the Fed rate this month, or at least for this meeting. And that interest rates were doing really well that day, but that conference or the press conference right after, when he started talking about why and how they're going to stop, or at least they're not stopping, but they're going to analyze data in the future on whether or not they should raise interest rates, kind of reassured the market that maybe it's a good time to start reinvesting in bonds because of the economy.
Do you think we'll have another increase? December?
I am not an economic specialist by any means. Based on what I am hearing, though, or I read a lot of articles, and we have a really good economic specialist in our company. But I think I'd say 75% chance we might not see another rate hike on the next meeting.
I'm 50-50.
You're 50-50?
Yeah.
I think if the data supports it again, like if we still see low job numbers, higher unemployment rates, and you have to think about they're going to have to do seasonal adjustments because of the holiday season.
Yeah.
I still feel that there's a 75% chance they might not.
It's looking good that they're not.
It's looking good that they're not. And I listened to the press conference right after, and some of the comments he was making, I know there was articles saying that he was still a little less hawkish, or a lot less hawkish than before. And I think he was like very neutral in terms of what he was saying. It almost felt like, they're kind of trying to pull back from that if they have to, but they're saying they're not going to stop raising interest rates until they're confident that they have inflation under control and that the economy is where they want it to be. But they said they're neither confident nor not confident. So that's why they're still kind of keeping it on the board when it comes to whether or not they're going to raise interest rates in the future.
So how is this going to affect buyers?
How is this going to affect buyers? Well, first off, interest rates, right? Interest rates is one of the key things, or one of the main things that kind of drives people's affordability and what they can get into, right? If you have a higher interest rate, I mean, your payments can be a little bit higher for a lower priced home.
But with all this confidence of not raising.
So let's look at this. So there's a chart I have here. So it has a little bit to do with interest rates. So there's a forecast for 2024 about around 30 years fixed mortgage rates. And it looks like Fannie Mae, which is one of the GSEs that we sell our conventional loans to, is expecting rates to stay in, or to be in the low 7s for the first half and in the high 6s on the second half, right? Now, when you compare that over to the Mortgage Bankers Association, they're expecting rates to actually be below 7% in the first quarter of next year.
See, it's going to happen again.
What's going to happen again?
Buyers jumping in.
And then we're going to have another hot market.
Yeah. Once they start dropping, people are itching to get into a home.
Yeah, absolutely. And they're just waiting for rates.
Yeah, it's rates. They're pushed out of what they want to get right now. There's homes available, especially new builds.
Yeah.
And there is an increase of homes coming onto the resale market. Slight increase last week. So
yeah, that's also one of the weird things too, right? Isn't there a slight increase, a little bit above normal for this time of year?
Yeah,
when it comes to it as well.
Yeah. Usually it's going down.
Yeah,
but now's a great time to sell, because the people that are that are wanting to purchase right now,
Mm-hmm.
they need to buy.
Yeah, absolutely. It's the
They need to
holiday
buy
season.
some. Yeah.
Holiday season. If somebody's trying to purchase right now, yeah, absolutely. There are a lot of buyers out there that really need it. So,
And plus, more homes come on. Usually, typically,
yeah,
in January 1st, 2nd, more homes are on the market.
that's when it is. And if you are a person who's kind of holding off on buying right now, like we'll touch on this a little bit later, but if you're a buyer who's waiting, you should really talk to us and we can tell you why right now would be a better time to buy. There's ways for you to save money, possibly even get a lower interest rate right now in terms of using like buy downs and seller credits and seller concessions. But if you're looking for that Black Friday deal when it comes to purchasing a home, do it during the holidays. Yeah. Move in Christmas. Why, or whatever holiday you're celebrating. Why you're going to have a bunch of those holidays for the rest of your life. Use one of them, get yourself a gift, get yourself a home.
That's right.
Get it at a better price that would probably benefit you.
That's right.
So for mortgage bankers though, right? So what they're predicting for the second half, right? They're predicting the rates to be at like the very low 6%.
It's going to be nuts.
If this is true,
yeah,
and these forecasts do come fruition in a sense, it could really set fire to the housing market.
Yeah.
Because right now it's a little dim, but
buyers get ready.
Exactly. Be ready. So if you're looking to purchase a home, don't wait on the sidelines when everybody's walking out at the same time. Get yourself pre-approved right now and know what you can get into and be ready to put in offers. That's what I tell clients all the time, at least.
That's right.
I'm like,
get a good agent, get a good lender that work together, and come up with a plan.
Exactly. It's
buying strategy.
You don't even have to rush into anything.
No. Got time to save money. Well, a little bit of time. Don't want to wait
during the holidays. You're telling people to
save
save money during the holidays?
No gifts. Save money.
You know what, guys? My gift for you next year is that I will host Chris's at a house, so no one's getting a gift. No one's getting a gift.
No.
Yeah. But there's great strategies right now and a great time to buy right now if you're willing to do it. But everybody's a little different. I get it, but it's honestly one of the better times to buy.
Yep, it is.
Let's see what I have here. So we talked about the unemployment. We talked about Jerome Powell, and like I said, there's one more Fed meeting coming up in this coming December. So this one will really, in my opinion, I think this one's really going to determine like the trajectory we take in terms of interest rates early on next year. So if the interest rates are feeling more confident about there being no more hikes in interest rates and start to take a downturn, what does this mean for buyers who are waiting for lower interest rates?
What does it mean?
Yeah. If all the markets, if there are no more rate hikes and interest rates actually start to take a downturn, what does that mean for buyers if they've been waiting for lower interest rates? Who have been waiting for lower interest rates?
Well, it depends if they're pre-approved or not.
Yeah, it's true.
If they're pre-approved, they're buying a home.
That's true.
Well, the others that aren't, they're going to be behind the curve, and then they're going to be
they're going to say, well, I'm going to wait for when home prices drop again, or there's always
another excuse.
Yeah, exactly. It's always excuses, right? So I think, in my opinion, people that are more confident about these rate hikes and waiting for low interest rates, this is the time to at least start getting ready for those lower interest rates.
Yeah,
all right.
That too.
That way you're prepared. Again, I live by the fact that people should be prepared. Don't do things last minute. Because you don't know, maybe you're one of those buyers that does need a little bit more work right now. Let's get ready now.
And if you bought within the past year, get ready for
exactly
to buy down that rate.
Yeah, exactly. So the refinance option right there. Yeah. So what does that do for people who own a home, who bought the home within the past 6 months, a year?
Refinancing.
Yeah, refinancing is actually, I didn't even think about that. That's actually a good topic. So what does it mean for people who are waiting for low home prices to rates go down?
Oh man, it's not going to happen. It's just going to create more demand.
Exactly.
So it's going to be that much harder. People from other states are going to be coming in, putting down cash.
Yep.
Or huge deposits, going over list with cash on those cream puffs.
Yeah.
The houses that everybody want. Move-in ready.
Yeah.
So, that's what Ollie says. Ollie at my manager.
Okay, you tell him what that is.
A cream puff is a house like where they're from.
Yeah.
Probably something that they love.
Yeah.
Has trees or nice landscaping, a pool. Maybe it's a 1-story, or it could be a 2-story, but big backyard, swimming pool, all the bells and whistles. Move-in ready.
So basically something,
modern, renovated.
Yeah, renovated, looks like the house of your dreams.
Yes.
Yada yada yada. You're just moving
Fresh
in and
paint,
doing nothing.
man, it's
Fresh carpet,
beautiful.
new tile floors, new wood floors.
Yeah. Smells good.
Yeah, it smells like new. Yes. But yeah. I think that's correct. I agree. I think that if interest rates are going to start taking a downturn, people are going to start reacting, because people always react. When interest rates are going up, the market takes a small dip. When there's anything on the headlines that interest rates go down, there's an increase in activity when it comes to people getting pre-approved and putting in offers on homes. So again, we were talking about home appreciation earlier, and I mentioned that we were going to talk about why we feel like this is going to be the case. If interest rates go lower, this is, like you said, putting more demand into the market. This is going to force our pool of homes available to tighten again, meaning we could have those overbids again. I hope it doesn't happen that way. I hope it's kind of.
I hope not either.
Yeah, but it's more people out there.
It's going to happen.
Yeah, so that means there's more demand. So if people are trying to buy something, what happens in a normal market of supply and demand? There's more demand and less supply. Prices go up. Prices go up. Exactly. So that's the reason why I feel that home appreciation will continue. Hopefully not at the rates it was before, because that's, in my opinion, a little ridiculous. But hopefully at a healthy rate, and healthy enough for people to feel confident to be able to get into a home, and healthy enough for people to actually still be able to get into a home.
One thing I gotta say, being fully approved for a loan, so it cuts down the contingencies.
It does, and shorter time period.
It looks better to the other agent. So the other agent goes to the seller and says, "Look,
they're done. They're ready. They're good to go."
14-day appraisal.
Yeah.
18-day loan contingency,
or even sooner. I've closed some loans in like 3 weeks.
Yeah,
a little slower than that too.
So that looks good, and I cannot tell you how much value that brings when you're shopping.
Yeah, I think that was one of the tactics that we had, is when we were doing that in that market, we would have people fully pre-approved, and not only that, we'd be calling, us as lenders would also be calling the agents and letting them, give them the full backstory on this client's.
They're ready to go.
Yeah, this loan. You know what I mean? Just confirming, reassuring them, and trying to fight for that.
That's huge
for that client, and that's going to be big too if the market does change like that. It's something I still do to this day, because I feel like it's a benefit that you should include for all your clients anyway, because
it's great customer service.
It is, and you're reassuring that client has a better chance of actually getting that home. And if they really love that home, why am I going to sit there and not make a 3-minute phone call?
Exactly.
You know what I mean? What is that? It doesn't hurt me.
Shows your value.
Exactly. Well,
ready to get this deal.
Shows the value that I have for my clients.
Absolutely. Yes. Yeah.
I love all my clients for the most part. But let's go on to the next thing. I think so those two topics, I think, are pretty head on. I think interest rates are possibly going to be a little bit better. I'm hoping that these forecasts are gonna be right, and especially when it comes to home appreciation, and if rates go down, long story short, home prices go up.
Yep.
Now's
the time.
Housing during the holiday season. We talked about that a little bit earlier. So why should you buy during the holiday season?
Because the seller that's selling, selling for a reason.
Exactly.
There's motivation.
Exactly. And they want to get all that done. I know sometimes people are hesitant to purchase during this time of year, right? They just feel like, oh, it's too much of a hassle. It's too much of this. It's too much of that. It's going to be the exact same hassle in a sense. You might have to carry a gift or two here or there, depending on what it is you're doing. Just don't host anything in your house for that year, maybe. You know what I mean?
That's right.
Or even if you did sell around Christmas time, you can always do like a rent back for a couple
Yeah,
for a few
absolutely.
days. You know
There's
what I mean?
options.
That way you don't feel like you're being pressured. As long as you and the buyer, as long as the buyer and the seller agree on all the contingencies, I think that as long as you are bringing these things up early, it's a great way for you to get in. And these people are trying to sell, so they're offering seller credits. So what do you do with seller credits? Again, we've talked about this before. You just use that to either pay down your closing costs and just get into a home a lot cheaper, or you use that to buy down the rate. You know what I mean? And now you have a lower rate on your loan, your payment's better, yada yada, and it doesn't cost you anything.
And you can run those numbers.
Exactly. And it's always good to compare your options, right? What do you do if you use credits and how you utilize those credits, whether again it's for the down payment or for the closing costs or for the interest rate buy down. Let me see. And let me see. Forecasted rates, all cash purchases on rise. That's the other one. I know we talked about it. You mentioned it a little bit earlier.
Yeah, all cash.
All
Those
cash.
cash buyers,
Mm-hmm.
cash is king.
Yeah.
How come people are buying with cash?
Well, you told me earlier, bro. What is it?
Yeah, they don't want to pay those interest rates.
Yeah.
Smart people, they're using that money.
Yeah.
Smart people with money,
Yeah.
they know how to use it to benefit them better.
Yeah.
So what can somebody do if they paid cash for that home?
Well, first off, you don't have to pay anything except for your taxes and insurance. But in a year, 2 years, refinance and take that money back out whenever you need it. Right now, yeah, you're holding it in an asset that you know it's going to make you money, But like you said, smart investors right now aren't necessarily using a lot of financing when it comes to home purchases, at least not what I've seen. They're going the cash route if they're able to do it because they don't have to pay that higher interest rate and then have to worry about the rents covering all that other stuff. So cash is probably the better way to do it, because if you buy a house right now with 20% down and you're trying to do an investment property, if I'm being honest, chances are you're not going to be making as much with rent as to what your mortgage payment might.
Yeah.
But these people are smart and they can always take that money out later when rates are better and use that money and put that money somewhere else where it's going to make them more money.
That's right.
It's just about making sure you put your money where it's making the most sense at that moment.
And with this current world climate of world wars going on, and potential threat of wars, people are parking their cash in different. They're pulling it out of the stock market, putting it bonds and
longer
real estate,
yields, something a lot more solid and more secure.
Real estate is always secure.
Except for 2007, but people need to stop comparing the rest of every other time to that one.
That's right.
Even though I brought it up like 3 times today.
Yeah, if you held on to it by now, you would have.
I'm a millennial, so that is still, for us, we need to hold on to those things. There's a couple of key things that I know that we always remember. All right, let's see what else do we have. So what kind of buyer is winning with seller concessions?
What kind of buyers winning with the seller concession?
They all win, but which one is probably benefiting the most from seller concession?
You know what? A seller offering 10,000, 5,000, whatever, whatever the price point is too. It's always a great option for the buyer if it's a house that people want.
Yeah,
because some of these houses that sellers have credits, but what they're asking for is way too high, and it doesn't make sense.
Yeah,
but some of them kind of do.
Yeah. Well, I think the kind of buyer that is winning is the one that doesn't have the money for all the costs,
especially for the down payment.
Yeah.
If you don't have all the funds for a down payment and somebody's offering that little extra to get you across the finish line, and you have enough for home warranty or whatever.
Absolutely. I
think that helps.
I think those are the biggest winners. And that being said, if things get a little bit hotter, seller concessions are going to go away, and it's going to get a little harder for those kind of buyers to get into homes. So
great point.
Which buyers are winning if we go back to a similar market as before?
The ones with cash to spend.
Exactly.
You're going over list.
Yeah. Because now the people that don't have the money are losing, right? They're sitting on the sidelines again.
Yeah.
And this time, not by choice.
And we don't have a crystal ball.
Yeah.
But this is probably what's going to happen.
Yeah. It's possible to happen. It's one of the possibilities that could occur with that happening. But again, you're sitting on the sidelines right now because you're waiting for this one potential thing to happen, right? And then let's just say that potential thing doesn't happen, and the one we talk about happens. Now you're sitting on the sidelines because you have no choice, right?
Exactly.
Right now you have a choice.
Now you have options.
Yeah, you do have options. You go out there, you find out what your options are first.
Yeah.
And find out what you need in order to get into it. Long story short, if you need to get into a starter home, and I know we talked about this last week or the other week when we did the other one, you don't have to say, if you're a single family, or if you're a single person or someone who doesn't have a big family, you don't have to get into a home first. Again, condos, townhouses are perfectly fine.
Absolutely.
Just get into it. Home appreciation happens, then get yourself into that other one. But right now, the way to win right now, or the people that can win right now, are the people that are okay with their payment but need the money to get into the property.
And these young kids that are making tons of money, these luxury high-rise condos, they have everything. The doorman, the laundry, they have exercise rooms, they have everything there.
Yep.
So you're going to spend a huge amount of money in the HOA, but you get the security, and you're not paying for a gym. You don't have to run out.
You get the amenities.
It's right there.
You get all the amenities. You got the security for sure, because you can't obviously get in and out of those high rises.
It's a great option.
Yeah.
For especially if you work nearby or work from home.
Yeah, I don't even think people really know about those options, to be honest with you. I think it's a very niche option, or some people think like it's expensive. So there are actually some pretty inexpensive high rises. It's just the HOAs usually.
It's the HOA where they get you, and if you don't use them, then it's not worth it.
Yeah. But it's not for everybody, but it's for those people that would love it. If I was younger and I knew about that, I probably would have went for a high rise at one point.
Yeah,
just for not this. I know this isn't going to sound financially correct in any way, but just for the luxury or the time period. Like, even if I was just there for a couple of years, just to have the experience.
Yeah, it's a nice way to live.
Yeah, and you can always rent those out later on too.
That's right.
I think, do the high rises have the Airbnb stipulations here, or
yes,
they do too?
Yeah. They all have HOAs.
Oh no, I'm talking about I'm talking about for the Airbnb. Do they have the Airbnb stipulations? Like, do they have to follow those same rules too?
I'm pretty sure. Pretty sure they do. But places like Signature, Trump Tower,
so the condo hotels,
you can put them in their rental market pool. You're not going to make a ton of money, and they have blackout dates. Trump is a little bit better with the blackout dates, but it's got to be a unit that people will want to stay in. That has a view.
Yeah.
Where is it looking at?
Yeah.
Is it going to have a view of the F1 course?
Oh gosh.
Something like that.
Yeah.
And
I was talking to somebody actually yesterday. I was at an open house, and this lady has a few of those, and she brought up a good point. Somebody renovated one of those units before and made it very, very attractive to people that wanted to do Airbnb by adding, like, I think, a pool table in there, changing the door, and just making it look like it wasn't a hotel unit in a sense.
Yeah, they do.
Yeah, but you got to put some money into that if you're going to do that, to be honest with you. So
that would cost a pretty penny. But cool. It'd be cool.
Yeah, it would.
Something different.
It definitely.
Those are dated.
If you have the money for it and that's something you want to do, go for it, man. I mean, look at your options. But other than that, I think those were all the topics we had on here. So long story short, Fannie Mae changes, 5% down versus 15 and 25% down for multi-units. Home appreciation
keeps going up.
Yep. And then interest rates kept going up. Hopefully now they're going down.
Yeah, leveling.
Something. Anything would be better than what people had seen recently. But we'll see what happens.
If you can afford it, buy it.
Exactly. And the other one is do your Black Friday deal and get yourself into a home during the holidays, man.
Yeah.
Beneficial. Right. It's very beneficial for some people to actually get into homes right now. Again, And again, no rush. Just do whatever you want to do, even if you're just getting pre-approved and getting out there, right?
That's right.
And then last thing we talked about was the rising cash buyers. And what that really, just the one last thing on that one, that kind of shows you that people are still, like you mentioned, very confident, like you said, in the housing market. So why, if they're still confident in it, why aren't other people? If the people moving money into it, people that do this for a living or invest are doing it, why aren't you?
Exactly. Well, why would they put into something that people think are going to crash?
Yeah. Why would you put it somewhere, dump your money somewhere where you think it's going to dump?
Yeah.
So it doesn't make any sense. But that's about it, man. Well, Rick, thank you again for coming this time, man.
Thanks for having me.
We'll see you hopefully soon again.
Yes.
And I will put your information in the description below. So if you guys have any questions about real estate, this is the guy for you. If you guys have any lending questions, I'm the guy for you. And I hope to talk to you, or I hope I see you guys next time.